Hello dear students.
Hi, ma'am.
So now let us have a case study on stock market. Now can you read the case?
In early 2024, rumors circulated in the Indian stock market about a potential merger between Zomato and Swiggy, the two largest food delivery platforms in India. Both companies had been competing fiercely for market share over the past several years. Following the news, Zomato's stock price surged by 12%, while Swiggy, not publicly listed, began generating interest in potential investors and private equity firms. However, Zomato stock later dropped by 6% when both companies denied any immediate merger plans, leaving the market uncertain.
Right. So heading of this case study is the Zomato and the Swiggy merger rumors in 2024. So initially in the year of 2024, in the beginning, so this year beginning, there was a rumor that Swiggy and Zomato, famous food delivery, online food delivery companies, they are going to merge. Okay. So in that condition, so there was a news that hot news that stock price of Zomato, it was increased by 12% when merging is going to happen, right? Suddenly it also increased, right, when merger denied. So the stock price, it is going to drop by 6%. So this is what the status. Okay. So initially there is a news that both companies, they are going to merge, and stock price, it is what increased. I am speaking about Zomato. And when this merger is going to decline, again stock price, it is going to decrease for 6%. And this is what the background of the case. And now we have discussion. So thing is, why did Zomato's stock price initially increase the following merger rumors? What is the purpose? What is the reason? Thing is, first, can you say
positive speculation?
very good. Because of this positive speculation. See, both the food delivery companies are very famous. If they are going to merge with each other, definitely it leads to some positive action, right? So all the companies, all the customers are going to very big happy for this news. So that may be positive speculation. And next is what? Market's excitement, right? So that might be the another different reason. So market's excitement is something that two different industry giants, both Swiggy as well as Zomato. Whenever we order a food, so one is probably one may be Swiggy, another may be Zomato. So in this situation, so market is what? Highly enthusiastic because of this rumor, right? Next is what? What do you think Zomato's stock price dropped when the companies denied the merger? See, when the merger was denied, the next step is what? Stock price decreased. Very good, disappointment. So when they merge, all the market enthusiasm that was happened, all the investors were very happy. When it was denied, the major thing, disappointment. So customers are not satisfied, investors are not satisfied because of this denied agreement. Okay. And next is what? Profit taking. Okay. So profit taking, in a sense, both the companies individually, they want to seek for high profit. Okay. And next is what? How should investors approach rumors like this in the securities market? See, any kind of rumors which is what spreading inside the securities market, how investors should face this. So one, maybe wait for the confirmation. Am I right? Waiting for the confirmation. See, if any news spread inside the stock market or any news, okay, first investors, they should think that whether it is the proper news or not, whether it is correct or not. That is waiting for the proper information, confirmation. Okay. Yes. So and next is what? Research fundamentals. They have to do some research. So simply blindly we should not believe whatever rumors coming from outside. We should not believe blindly. So proper research that we have to do. Who? Investors. I am speaking about investors. So next is what? What kind of regulatory measures that SEBI can take? So even all the stock markets listed in the company, every companies, they have to obey SEBI, right? So when we are involving into stock market, we have to obey all the regulations provided by SEBI. So in this scenario, in this particular case study, so SEBI, what kind of situations, what kind of actions they are going to take is monitoring market activity. All the market activity, how it is happening, SEBI have to monitor. Okay. And next is promote investor education. See, SEBI's major thing is what? To promote the education to the investors. So whether to invest or not to invest. So that is what the role of SEBI over here. So do you all understand this case?
Yes, ma'am.
Thank you.
Thank you, ma'am.